Good morning from Europe. This is Ahura. I will be with you with the economic data review. We're going to have some short review on the economic calendar data so far we had yesterday and today till now. And then we're going to see what's waiting for us later today in calendar. Today we're going to have so far from after yesterday's update. We had the Japanese machinery orders rebounded strongly in August. That shows that the Japanese economy result that we have generally it was positive. In French, industrial output falls in July, continuing negative data from Eurozone, while Spanish 3 month bill yields edge lower. That's the same trend that we can see in Germany, we can see in Eurozone generally, we can see in China, we can see in United States as well. South Africa's economy expanded better in the second quarter, while the German 10 years bond yields also fall in last sales. The thing is that the auction yields like now is in Germany is the lowest since 2024. That means that generally the demand for the Germans bonds increasing. U.S. small business optimism NFIB actually increased to 100.8, shows that generally above 100 that shows that the small business continues moving better. Generally, the data that we have from U.S. economy and the rest of the recent data we have, they're fine. I mean, we can say that U.S. economy facing which any specific problem or the challenge. Mexico's inflation remains strong still at the increase on the multi-scale increase by 0.22%. Headline inflation in August, it was 3.57%, slightly higher than expected. U.S. Red Book retail sales hold steady at 6.6%, slightly above 6.5% reported previous week. Brazil's auto sector shows mixed signal in August. We had slightly less production in Brazil's auto factories, but slightly the selling was better. U.S. payroll benchmark shows larger decline in August. That the thing is that while the market, the U.S. unemployment rate stays at increase to 4.3%, we saw that the hirings also weakening. NFP fell to 22,000, and the previous the recent average also fell to 29,000. So we can see the reflecting the U.S. payroll benchmark index, which is showing that the falling 911,000 in 2025 so far. It's much weaker than 598,000 expected fall in the labor market. That's the one of the biggest decline in a decades. I mean, in the last decade. That shows that the U.S. labor market really facing a slightly bigger problems. Russian budget deficit narrows in August, shows slightly better movement in economy. U.S. 3 year Treasury yields continue to decline to 3.49% from previous week's 3.67%. The same trend we can see in different economies. New Zealand immigration and tourism getting stronger in July, continuing the better economic data recently we had from China, we had from Australia as well. South Korea's jobless rate inched higher in August, slightly higher than 2.5%, moved to increased to 2.6%. Still, it's not a big deal. Japanese Reuters Tankan sentiment improved in September to 13 from previous months 9 in August that we had. This index was 9. On the other hand, the Japanese 5 years bond yields rise to its highest level since 2011. The same trend that we had for the 10 years and 30 years bonds as well. Japanese bonds compared with unlike with other economies that are falling, Japanese bond yields or still improving, showing that the market expecting higher interest rate from the Japanese Central Bank or BOJ. Chinese inflation slips further with 0.4% in August after being flat in July. However, the producer price index improved slightly by falling 2.9% in August, better than 3.6% the drop in July. Spanish industrial output expanded better, while in Turkey, industrial output rose slowly to 5%, down from previous 8.3%. Those are the data that we had so far yesterday and today so far. On the energy market, also I have to mention that according to the US API, US API, sorry, there are too many API, IPI, EIA, IEA, just like sometimes I just like we can mix the numbers and the names. US API shows that the US inventories, crude oil inventories, increased by 1,215,000 bottles previous week. Today we're gonna have the more data from previous inventories, which the official number is going to be published by EIA. Yesterday, EIA also published its monthly report, which showed that the short-term energy outlook reports by EIA in United States, showing that the market expecting around $51 as the crude oil price, as WTI price for the next year. That shows the lower digits compared with the previous estimates. Later today, the main market focus for the data will be US inflation, producers inflation, and also mortgage rates data. We're going to have to see that the 30 years mortgage rates showing to after previous weeks that it fell to 6.64 from previous 6.69. Now we expect to see again falling slightly more around 6.60. 62. That's the numbers that the market expecting, and that's why we should see now more demand and applications for mortgage rates for mortgage. I mean, the mortgage application should be increased. That generally the mortgage market should show more activities. Later in United States, we're gonna have the producer price index data, which is expected to increase by 0.3% monthly core PPI for the core PPI, and the headline PPI suppose also to increase by 0.3%, but on the annual scale, PPI should stay unchanged at 3.3%. And the core PPI should slightly ease to 3.5% on the annual scale. We have to wait and see what's going to happen. Generally, the market about the inflation is slightly more serious. I mean, more seriously watching the numbers to see what's going on here. Also, we're going to have the Brazil's inflation data, while the Mexico's PPI also supposed to be published after slightly improvement in the consumer price index in Mexico. Today, we have to see what's going to happen for the producer price index. That's the crude oil inventory is also, as mentioned, supposed to be published later today for US, and also we're going to have the Argentinian inflation numbers from the South America, Argentina, Brazil, and Mexico. They're going to publish their inflation numbers. Very important. Recently, data in South America showed that the inflation slightly improves, and we have to expect slightly more cautious policies, probably we can say, better to say in this way, more cautious policies from South American countries. Looking at the data reaction in the market, we can say that the dollar index is after yesterday's fall again slightly increased to under 98. Now it's moving around 97.30 around this area. Generally, still we are not positive about the dollar index should be around 98, slightly lower. Market condition with slightly weaker dollar, at the same time higher risk, especially after yesterday's Israeli attack to the Qatar to kill the Hamas leaders. The gold holding its new highs around 3,650. Same trend we can see for the silver, while gas price also moving sideways. It's slightly positive tendency around $3.30. Energy moves more, more cautiously, as mentioned, especially again yesterday's Israel Israel's attack to the Qatar. WTI also trading positively around $63 on the stock market. Is unlikely, not unlikely, unexpectedly, we can say, as a surprise. Again, S&P 500 in the futures printed new record high above 6,336. While the Nasdaq also moving further with the new record $23,950. Dow Jones also is a positive, even though it's not printing a new record, but it's positive. On the cryptocurrency market, Bitcoin, after yesterday's shortfall from 113 to 111 almost, now again trading positively, 112,000, about 112K. Generally about 109,000 is positive, but to confirm the overall in continuing the uptrend, we should see the prices more stable, about 113,000. Yeah, that was the market update from the data published and data that are going to be published and market reaction. Have a good day. Talk to you tomorrow. Bye bye.